Welcome to Technical Tuesdays. This is Fred Razak, Senior Trading Strategist here at CMTrading. And today we're going to be discussing the two most important components of trading. But before we start, make sure to like and subscribe so that you could get future content like this. And the more you share, the better it is. More content is then dispersed to the markets, to your friends, and they will join and support the channel. So I do appreciate that. Thank you. Now, the two most important components of trading success. So I'm going to first start with an analogy, and then I'll get to what they are. So here's the analogy. Coca-Cola does not make a new product every year. It made a product about 200 years ago and just does the same thing. They mix ingredients, they bottle it, they distribute it, and they sell it. That's all they do. Yes, in between they do advertising and marketing, but that's it. That's all they do. And all they do basically is replicate success. They have a successful product, they do it, they redo it every single time, and then they bottle it, and they distribute it, and they sell it, and it just keeps on going. So the secret of any kind of success in business is replicating success. Once there's a niche, once you see that there's a situation that you could take advantage of in the marketplace, boom, that is your atmosphere. There's these two brothers that started out in the mailroom. They saved up some money and they bought their first house. They fixed it. And what they did is they flipped it. And ultimately they kept on doing this. And today they're multi-billionaires. And this is not something that's new. This is just something very basic. We overcomplicate business and think it's just something that is just beyond our means. And it's not. It's just about replicating success. No matter what we do in life, it's about replicating success. And that's really all it is. So what are the two components to replicate success in trading? So number one is volatility. You need the markets to make these big swings in order for you to take advantage of the fluctuations in the market. If the market is moving from $1 to $2, you can't do much. But if the market is moving from $1 to $10, you could do a lot more. If I take an example of that, if I have $1,000 and I buy a share for a $1, so I own 1,000 shares, if it goes to $2, I've doubled my money. But if it goes to $10, then I've 10-bagged my money. And so you need volatility. This is really very important. And some of the most volatile assets are commodities, not cryptocurrencies, not Forex symbols, and people don't know this. So they gravitate to all these, high-profile names where they're missing out on all the real action where you're looking for volatility. So number one is volatility. You need the markets to make swings. Number two, it's very simple, character. The stock or the asset that you're trading can't just be arbitrary. It has to show and prove to you that it has a certain character. Are the markets strong? Are they weak? Are they consolidating? Are they just not trading? It's one of those four options at any given time. And so when you're able to just focus and to understand what the market is doing at any given time, both with volatility and character, boom, that's your environment to replicate success every single time. Not even a question. And so this is what I would suggest for you. Keep an eye out for the volatility. Look at the high and lows of every single day of the particular asset that you're trading or you're looking to trade and see if it has character. Does it have follow through? Is it one day going up, the next day going down, and then, just haphazardly? Or is there money being flowed into it? So there's a trend. Is it trading within a range? That's character. That's important. And if it has volatility, it usually has volume as well. And with these two components, you're able to replicate success. Thank you for joining. We'll see you here next week on Technical Tuesdays.